Good evening, everyone. It's Friday, September 27th, 2024. I'm Jessica with NZAI News, here to bring you the latest updates from the stock market. As always, before we start, I want to remind you to please do your own research and due diligence before making any investment decisions, no matter what anyone says. Now, let's dive into today's news. Today, we're looking at some significant moves in the New Zealand share market, particularly involving three major companies: Fisher and Paykel Healthcare, Ebos Group, and Fletcher Building. Starting with Fisher and Paykel Healthcare, its stock has been under pressure this week despite a strong performance earlier this year. The company's shares dropped as part of a broader sell-off, influenced by investors looking to reallocate their funds. This comes as Fletcher Building announced a significant capital raise, prompting some investors to liquidate holdings in other blue-chip stocks, including Fisher and Paykel, to free up capital. It's worth noting that Fisher and Paykel's financial performance remains solid, with the company recently upgrading its earnings outlook for fiscal 2025, driven by increasing demand for its medical devices in hospitals worldwide. Ebos Group, another key player in the healthcare and distribution sectors, is also experiencing a downturn in its share price for similar reasons. As investors shift focus to Fletcher Building's capital raise, the resulting sell-off has hit both Ebos and Fisher and Paykel. Despite this, Ebos continues to maintain a strong position in the pharmaceutical distribution market and has long been a staple in New Zealand's healthcare industry. Fletcher Building's capital raise has been the dominant factor in this market movement. The company announced its intention to raise a substantial amount of capital to fund new projects and shore up its balance sheet, creating a ripple effect across the New Zealand exchange. Investors looking to participate in the Fletcher capital raise are offloading other major stocks to fund their involvement. As a result, the S&P NZX 50 fell to a 6-week low, closing at 12,303.99. Fisher and Paykel and Ebos both contributed to this decline as their shares were sold to finance this shift. This kind of capital movement is common when large companies announce funding rounds, but it's important for investors to remain vigilant and assess the long-term prospects of their holdings. That's the latest on what's moving the New Zealand share market this week. Once again, please remember to do your own research before making any financial decisions. Thank you for tuning in to NZAI News. Don't forget to like, subscribe, and share this video for more updates on the stock market. See you next time and take care.